Well, we've got basically a Noah's Ark, or Jay's Ark, we should say, of data this morning that we got to run through here, including retail sales that come in stronger than anticipated on a headline number, up 1%. If you look at the control group, up 0.3%, down from last month, but it is significantly higher than the 0.1 that was anticipated by economists. Initial jobless claims fall 227,000, and continuing claims are below where they were unrevised. We'll see what the revision says, 1,864,000, and last week's headline jobless claims 234, so almost no change there. So a decline in both of those. Import prices come in up just 0.1, ex-petroleum up 0.2, and on a year-over-year basis, we're up 1.6%, same as last month. So import prices not adding to inflation at the moment. And finally, two other numbers. Philadelphia Fed comes in -7. That's down from 13.9. We'll have to see what the underlying numbers are there. And Empire Manufacturing, -4.7. That's a little bit better than the -6.6. So I don't think, given those two regional indicators, they kind of offset each other in terms of the impact. And I don't know that it tells us anything necessarily about what we're going to get from ISM once we get to the beginning of the month.
You've been looking through, Mike, the information. So what do you see?
Well, if an economist missed it, it's probably because they didn't get the whole strength of the auto sales business. Because remember, in June, we had a hack of the auto sales data system, and a lot of people couldn't process sales. So sales were way up 4% rather in July compared with June, and that adds a lot to the overall number. However, the interesting thing here is that just about every other category is up. We see 0.5% gain in furniture, a 1.6% gain in electronics and appliances, building materials up 0.9. Interesting in light of the results at Home Depot the other day, and food and beverage up 0.9. Grocery stores up 1%. Now, we were told, and you see a little bit of this in the Walmart numbers, people were switching out of what they're buying, a little bit less of the discretionary stuff. And we do see that because we see a rise in grocery stores and a decline in department stores of 0.2. Miscellaneous store retailers, which would include the internet folks, down 2.5%, but non-store retailers, which is much more directly the internet folks, 0.2% gain, very small. Food services and drinking places up only 0.3%. So if you want to look for a softening in the economy, it's in kind of this discretionary side. But overall, people are still spending.